All right, guys, another weekly scan here in the books. Hope everyone had a great weekend. If you guys are new to the Discord, welcome. This is a very simple scan that I go over each Sunday where I review some of the most actionable setups from my perspective and kind of just system trades that I typically take from whether it's a distribution schematic or an accumulation pattern or just a simple mean reversion trade. As you guys know, or if you've been here for a little bit, obviously still looking at the major distribution playing out with current price action in this boxed range, as you guys see there, as a distribution. However, we should know that this is a process, and we saw some warning shots fired over the last 2 days, where essentially the entire month of July was given up in 2 days. Um, Obviously, Meta and Microsoft major gap ups, where we saw Meta pushing 12%, Microsoft pushing that 10% threshold. Both of those sold off dramatically in one day, and Nasdaq went from green with a massive gap up to red, right? So really, really triggering um, kind of move for a lot of bulls, especially if people were buying into the potential strength that was relayed from the earnings report. But yeah, just not a good sign overall for the market. If you guys didn't see as well on Friday, the jobs number was actually revised. So very interesting, right? Where Powell, one of his major reasons for cutting rates would be, inflation obviously coming down, or if the labor market weakened. Whereas we're now starting to see an uptick of inflation, right, with tariffs obviously being the core driver behind that. But also the labor market was still strong, so really no reason for Powell or the Fed to cut rates. But with the revision of the jobs report, we're now seeing a major, one of the biggest revisions that we've seen in a long, long time of the job market. So labor market weakening. If inflation starts to cool off, this is a very hot potential for the Fed to actually cut rates. So, um, you know, bearish somewhat, but also from a deeper perspective, this could be really good for the equity market. It's just kind of how you perceive it, right? Because obviously, if we start to print more money, that's still inflationary. That could drive inflation up in the long term. Short term, is that bullish? There's a lot of different ways to view this, but I'll go into the most actionable setup here in a minute. But for now, right, very interesting. That's probably why the market sold off. And what we're taking a look at now is a very strong two-bar setup, right, where we pulled back down. It looks like the distribution and UTAD is coming to fruition, right? What we're really mainly looking for is a break back underneath this old all-time high, right around 540.8. But I'm expecting a lower high, right? It doesn't have to always come down picture perfect and retest the exact level. We've seen this time and time again with a lot of other distributions that have played out. Um, Sometimes the index itself or the indice itself will break down, but the underlying names actually catch support first, right? So if we take a look at Meta, Meta is a good example, one of the leaders in the Nasdaq, right, where this actually had very similar setup with a buy climax and up thrust. It popped for our UTAD and it sold down. But if we take a look, right, this is retesting that potential UTAD breakout at 740.91 almost to the T. It's a couple, maybe a dollar or two off, but for the most part, almost a picture perfect test of that level. We take a look at Microsoft, right? Microsoft is essentially testing back onto this gap here, right? So you can just take a look right there. So a big support level for bulls off of that. If we jump out to the weekly, right, obviously this is an all-time high. A lot of these weekly candles aren't the prettiest, but like I said, if you take a look at Meta, you take a look at Microsoft pulling back to that gap, we take a look really quickly at Amazon, right? Amazon pulling back to a key level. I mean, we can take a look at multiple confluences here. We can go as far back to this previous high breakout here from 1114. You guys can see it flagged and pulled back on before making a new high, so that's a relevant level. We can also even go to back here, right? So we have a pretty meaningful gap right around 208. The gap up obviously occurred right around here, so 212 to 208, this little box that I have drawn out. Another support level that we could see Amazon catch. So that's Meta, Microsoft, Amazon, all the major tech leaders, right, in the index itself or the basket itself coming into support levels, right? So like I said, it doesn't have to come fully to the spot for QQQ or SPY. It can be just shy. where we could see, hey, does this bounce push for a new high, or does it end up being the LPSY for and ultimately a lower high? Take a look at Apple as well. I mean, Apple, really gross chart here. We were able to kind of call this. Unfortunately, it was just a terrible range. I didn't feel like the risk to reward was there. But, this name's pulling down into a very interesting spot where we had this little gap here, right? If we just draw this out from here to here, right? Close to open. This whole range is pretty much support you guys can, I would consider. Obviously, the midpoint would likely lead to some slippage towards the lows where you have a lot more buyers near these lows. And there's a gap actually slightly below that around 198. But all in all, right, this little pocket right here is a nice base for some potential support. So, a lot of these names are pulling into some very critical levels where I expect buyers to show up. Whether they're strong buyers or weak, it doesn't matter. I think that we are going to see some sort of buying. And now jumping back into Qs, right? I like this chart a little bit more because we're focused a lot more on tech, which just reported this week. So tech is going to be the primary driver of the market, right? So QQQ is direct exposure to that. If you take a look, I already drew out the gaps here. So 565 is the gap fill. If we take a look at 553.82, that's technically the close from this, but the gap technically starts here, right? So the gap would be right at the open, so 558.83. I have the close drawn for a specific reason. I'll talk about that in a second. But, as I said, we're have a little bit more to go if we were to break down to retest that old high at 540.8. But there's a sneaky spot actually on QQQ, which lies right around here, right? We talk about this all the time with progression gaps or gaps just being filled in general from close. Right, this is a key spot at 550.8, okay, and it pulled down right into that level. If you guys remember, this is actually an NWOG, so new weekly opening gap, where we gapped up from, actually no, this wasn't an NWOG, where was it? This is just a random daily gap, so my bad, I apologize. So just a gap that occurred on the daily, but you can see we pulled down underneath it one day, we tapped it 2 days, we consolidated on this for 3, 4, 5, 6, popped out. 7th day, we ended up pulling back down to retest that, and then we went higher for those incremental higher highs. So we have a lot of support that's been built over 6-7 days here, right, with one large retest occurring on 7/16. So naturally, I'm going to view this as a critical support here. So, basing everything off of 550.8 this week. If 550.8 cracks, I think this comes lower. This also lines up really nicely, and it's obviously a little bit too late now, right? But this kind of pushes up, to my opinion, back up to the 9 for that retest as an LPSY. But if we also go out to the weekly, right, this is pretty much lining up with the 9 EMA on the weekly, right? That 550.8. So if we slip under 550.8, that will coincide really nicely with the 9 EMA, and then we'll likely push down into 540 and come, in my opinion, trickle down to the 20-day on the weekly, right? So a lot of this is lining up. Just need a little bit of time. But as I said, I have a lot of cash on hand to be able to spot trade. Even though I'm bearish on the market and I think this is a distribution, I think this is just a weak bounce that's going to push back up into the 9-day and or this gap at 565. Tech just reported. Tech's all coming into a big critical support across the board. So why not just trade some longs that are expiring either this week or 8/15 to capture some upside move and then use that money to roll into our longer dated, right? Makes a lot of sense in my opinion. And really, we have a clear defined risk for our January puts now, which would just be this high from Friday or Thursday. Yeah, Thursday. I apologize. So 574 on Qs, on SPY. You guys can just take a look at that. That would be right around here, right? So up to you guys if you want to do that or not, but 639.85 rounded to 640 would probably be stop loss here. And that's really what I'm looking for, right? So QQQ, looking for a trade to the upside here. Let's also talk about the implied move. So for the implied move, it's really simple if you guys don't know. So if you want to look at it for a daily basis, you could look at it for a weekly basis. In this case, we'll be using the weekly. All you do is go for that Friday expiration of the current expiration week. So in this case, it's August 8th. You would take the at the money calls, right? You take the bid and the ask. I like to just go with the mid. And then you take the at the money puts, right? Same thing, just go with the mid. And you add these two up, right? So you're going to add the at the money call and the at the money put. Add you can do bid or ask. I just like to go with the mid though. That's probably the best option with that one. So you would add those two together. So in this case, it'd be 4.57. This is all based off of the close from Friday. So these sometimes update, so these numbers are a little bit off, but from the close, it'd be 4.57 plus 4.94, and that equals 9.52, right? If you add the at-the-money call and the at-the-money put, which is your straddle, you then convert that into a percent, right? So the implied move would then be 9.52, and you divide that by the current underlying off of Friday's close. So the Friday close was 553.88. You multiply that by 100, and the implied move for the entire week ends up being right around 1.7%, or $9.52 for the entire move of the week. So if you guys just add this all together and kind of, take a look at the chart itself, this is why I have it drawn this way. So from the close here, if you take this, we're looking for a 1.7% move, right? It doesn't always happen. Sometimes it undercuts it just a little bit. So 1.7 would be like right around here, right? So I can't get it perfectly. So like 563.2. It lines up really nicely with the 9 EMA. And it could overshoot it a little bit, right? If this overshoots, it definitely could push all the way up to 565. That's entirely fine. That would be around a 2% move. But this is the overall percentage move that we're looking for the week, right? So this is what I'm looking for. If we end up making a move down, I'm not as interested in the put side because I already have puts on SPY for January, right? And my plan for this, as I've mentioned multiple times, is for it to break underneath the old all-time high, push back up and retest and fail, and that's where I'll add the puts, right? So if we see a lot of these confluences occurring, we're coming down to a major support, not only with QQQ, but all of the major underlying names within the basket. I'm really just looking for call side, folks. And I have this drawn out already. Really all I'm looking for, right, is we are up a little bit in after hours. I do want to mention that. So you guys can see we kind of made a move up from the close. Just a slight gap up. I would still call this relatively flat since we're right around this lower high from 11:30 on Friday. So really all I'm looking for is this for, maybe gives up its move. That's totally fine. If it gives up its move and it comes back down, I just want to see bulls hold a green to red move, right? So remember, if this opens up higher than the previous close, that daily candle will technically be green, right? If it breaks down and pushes underneath Friday's close, that would be a red candle on the daily. So I want to see if bulls can, open green on the daily candle. If it flushes down and it pulls down for a potentially green to a red move on the daily, I want to see if buyers can step in right around here, right around Friday's close, prevent the green to red move, and then we get a big pop off of 553.82 and make our way up into that, that gap that's sitting open here at 558.83. If we break through that, what do you guys expect, right? We always do the same thing. You want to see a harmonic breakout where it breaks through that resistance on high volume, so that's important to note. You don't trade on the breakout, you wait for it to pull back on divergence, so volume needs to be pushing down as it's selling down, meaning selling pressure isn't very high, and bulls are technically still in control. You want to see price then be controlled at that level, and whether it does something like this where it consolidates over multiple bars, or it's a simple bull flag, just a 1-bar pullback or 2-bar pullback, and it holds, right? You want to see buyers step in with high volume and prevent it from going lower. Then from here, I think there's another option where you can either add into the winner, or you guys can roll and start another position, so you can have 2 positions at once, or just hold your winner, right, and let this thing kind of just trade against 558.83 and then move up into that 565, or you guys can just really go based off of that 1.7% move that we're looking for on the weekly, which is like 563.84, right? Very, very simple. And that's it, guys. That's all I'm really looking at for the week. Nothing super, super drastic, just a one trade kind of thing that I'm looking at, and that's really it. And then from there, right, economic data-wise, nothing too drastic on that as well. I'll pull up my trading view really quickly. You guys can take a look on this right-hand side here. Let me pull this across. You guys can see, excuse me, sniffles right there. Nothing really this week, guys, right? One thing to take into consideration, though, it is the end of OPEX. We have now passed OPEX from July, right? We have that 2-week window of weakness. We saw 2 days of major selling. What can we expect, right? That now window of strength for the next 2 weeks leading into the next OPEX around August 15th. So I would expect move back up, right? And not only does Vana Charm support that, but a lot of these names coming into support off of poor earnings just kind of all aligns for a push up, whether it's on low volume, right, or not. I expect this to be a lower high and not make a new high, and that's kind of what I'm banking on here leading into August 15th. So not a lot of support coming from, or I guess like catalyst coming from data itself. Really, it would just be a couple earnings that are remaining, and then Vana Charm would be the last driver or the last catalyst. So that's all I'm really looking for. I'll keep you guys updated tomorrow. Really, all I'm looking for though is 565 calls, or what you could do is even just take that a little bit lower and target right here, which is 564, which would be Thursday's low. And that's really all I got. So just a one trade look kind of week, right? It's very, very simple. We should all be on the same page. And that's really it. So hope you guys enjoy. Hope everyone has a great night, and I'll see you guys tomorrow. And let's try to knock this week out of the park. Last thing, guys, I'm sorry I forgot to mention this, is TLT, where I think a lot of us can agree that the market really has been pricing out slowly rate cuts. I know going into the September meeting, it was like 90% or something like that. And then obviously, and very understandably so, Powell has been adamant on saying that there are no cuts coming. If anything, there's going to be a pause because we are seeing inflation go up. The labor market has been very strong. But with that revision, I think it opens up a whole new dynamic where now we are leading into a potential recessionary environment. Only thing we need now is inflation to come down a little bit. But that jobs report number is pretty drastic, as I said. So we could definitely see the Fed start to pivot, and I think understandably so, right? And we saw TLT and the bond market react, I would say, accordingly. On Friday, we saw a massive gap up, right? And this thing has really been basing out for a long time now, not really making a dramatic new low, and really just kind of consolidating against this 85. Sorry, I had to sneeze. Against this 85 spot, but a massive, massive move up where it just kind of consolidated against the highs, right? Right around 87, and for the most part hung around like 87, 88. And this chart looks really, really good. Not only did it have a good move up on Friday, but the CME, if you guys take a look at that, and I'll actually pull that up really quickly so we can have that on hand. CME Fed Watch, right? If you guys don't use that, I would highly recommend doing that. You don't have to use it all the time. I mean, it can definitely create some kind of a bias, but going into the September meeting, this number initially was right around like 90, 88%. Powell came on during FOMC, and this dropped all the way to 60%. Then, after the revised jobs number report, this jumped all the way back up to 81.5% chance of a cut in the September meeting. Now remember, the September meeting is very important because we are getting 2 CPI prints leading into that, and then we are also getting 2 PCE prints leading into that. Obviously, job numbers will be in there as well, but those are the two that we really need to see. We need to see PCE, we need to see consumer and producer inflation reports, and we get 2 of those versus just one leading into an FOMC cycle. So this will be very, very important to be watching CPI and PCE and seeing if that number is either staying flat, if it's increasing, or what we want to see is a decrease. And then this in conjunction with the chart, really nice spot here in my opinion, from this previous progression gap back here at like 88.24. This lines up really nicely with this lower high right around here from the end of June going to the beginning of July, right? So clear lower high that ended up selling the bond market back down, and then we saw a really nice bid come off of that 85 spot once again, and now we are making our way back up into this zone, right? So 88.24, or if you want to just pull that up just ever so slightly up into this spot at 88.43, I think this is a beautiful spot to begin looking for longs, right? And if you guys even want to make this a zone, this is entirely fine as well, where you can just take this progression gap from like 430 into 5.2. You just extend this out. Let's just give this like a couple months where we can just extend this out to, and let's just draw a couple lines here as well to just make it look pretty, right? So if we want to just delete 88.43, you guys just want to have a box here. I think this is a super clean chart if it can get above that, and then whether it bases 88.43, if it bases 88.69, either or, I think this sets up a really nice trade not only to like 90, right, which that would be the first target that I'm looking for is 90.21, but if we do ultimately end up getting cuts across the board, I think this can have a swift date up into this zone up here, right around 91.88 to 92.85, right? So just kind of pulling this through, you guys can see, I think we have a really quick move up into 92. We'll just round that to 93, right? 93, 92. So I am looking for $90 calls. And going towards September, October, I think October would likely be the safer play, or just depending on pricing, you could even move this out till December. But yeah, definitely kind of keeping my eyes on TLT as like a back pocket trade, and a lot of this is, definitely predicated by what PCE is over the next two reports, as well as CPI, but also looking at the chart. I mean, if we get a break over 88.69, I think some risk on the table is definitely worth it, and then adding into it if necessary. So just keep this chart on watch, guys. I think TLT is definitely a chart that's in the making that could have a really, really nice move. Like if we even just catch it off of 88.69 and we push all the way to 93, it's a big move, guys. These contracts really don't price moves in like this very well. IV is typically low on top of it, so if we can catch a 4% move that happens within a week or a couple days, this could absolutely go bonkers. And if we go back to some of the previous QE cycles, right? I mean, just take a look from back here when we were cutting back in previous July, right? We saw a gap up, gap up, gap up, gap up, right? When this moved essentially, from that range to from that low back up to the highs, it moved 7% in roughly 7 days, right? So this could move very, very quickly. It has a ton of room. That's just one target, right? 91.88, 92.85. Beyond that, this could easily move up to 95, fill a gap at 96, and you guys kind of get the picture, right? We could see the potential for another chart that's just bottoming out that has potential for an accumulation, right? We saw that beginning of April. That will be no different than what we saw happen in April with a lot of the broader market, right? This name just could be lagging and is obviously very dependent on interest rates, but nonetheless, the chart looks really good for a move back up, zone to zone, right? And potentially even topping out for a full move if we were able to capture this. If it was able to get up to 98 and we had December contracts there, say, we could get a massive 11% move. So definitely keep this chart on watch, guys. I think this is definitely a sleeper that a lot of people aren't really looking at, and a lot of people dismiss because it didn't look likely for cuts. Obviously now things have changed and the chart is aligning with a broader thesis. So keep this on watch, guys, and I just wanted to add this into the scan as well.